Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap for Wednesday, May the 23rd, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses. These are our trade plans. Usually we have two main hypotheses and two alternative hypotheses, which are trend type scenarios. We don't do this because we're trying to hedge our bets. What we're doing is we know that we can't control the market. Therefore, we wait for the market to show us what it's doing, and then we execute the plan that we already have in place that best suits the market. This is a subscription room. If you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no website. There's no blog. This is not a commercial venture. We do everything live here in the go-to, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Looking at yesterday, now yesterday we had three main hypotheses because of the context of the market. Hypo 1 was an open auction in range, a move down into the the naked VPOC and naked close, and somewhere between there and the value area low, we were looking for buyers to step in, rotate us up into the mid area at 49. Hypo 2 was a gap and go day, failure to close the gap, push up, break through the key line in the sand here at the 41 and a quarter, and push up and make a move up into the 2760 area before closing around 57. And then we had Hypo 3, which we said yesterday was going to be equally weighted to Hypo 1 and Hypo 2, and that's basically what we got. We got an open auction in range, a push-up, failure to hold above the key line in the sand at the 41 and a quarter, and buyers step in, rotate us down. They put in a lower high, came down, and at one point it was almost looking like we were going to get the alternative hypo, which was basically an inside day, a balancing day, but they did end up selling off and pushing down into the 1920 area, and then close in between the 25 and 28 as we were anticipating with Hypo 3. So Hypo 3 is actually what we got. We created a double distribution. We saw some weakness coming in, and then overnight they got the continuation. We got the push down, the close near the low, and then the overnight inventory, you can see, is net negative, and basically they just walked it down, and now we're down trading in the 2709 area with the VPOC shift. And this could be a buying opportunity, or it could just be a opportunity for the sellers to accelerate and push us down into that gap zone at the 2701.50 and down into the 2600s again. But we'll get to that in just a few minutes. Let's first take a look at the news. We have, of course, it's Fed minutes day, so we do have the Fed minutes coming out at 2 o'clock. Very important to understand that this market may make a move in the morning and then go sideways until the Fed. And they've been doing a lot of this midday grind of just going nowhere. In fact, I gave up most of the afternoon and just I actually fell asleep in my chair, believe it or not. But in 54 minutes, we've got the manufacturing PMI and the market composite PMI and the services PMI. Might get a move off of that, but the big one in the morning is going to be the new home sales and consumer confidence. Then 10:30, we've got crude inventories and everything that comes with that. And then at 1 o'clock, we've got the 5-year note auction. But again, as I said, we've got the FOMC minutes coming out at 2 o'clock, and then Kashgari is speaking at 2:15. So that will be the big news that we'll be waiting on for this afternoon. Each day, I like to start my day with a simple exercise. I do this. It seems simple, but it is very important. It puts me into the perspective of where we are in terms of the trend in the different time frames. I start with a monthly, and I work my way down into the intraday. And what I'm doing is I use a 9 EMA, 20 SMA. I'm looking at where are we in terms of the trend. Do we have good slope and separation? Is the trend, still strong, or are we challenging the trend by a move back to the 9, or are we violating the trend with a move below the 20? And you can see that this long upward trend on the monthly was starting to get challenged. But so far in the last 4 months, even though we've come down and violated the one-time framing, the 14 months of one-time framing up, we have basically not closed below the 9 EMA. And the 9 EMA is down here in the 2643.75. So we can move all the way down into the mid 2600s and not even come close to violating the trend on the larger picture. We would have to get down into the 2400s right now to violate the upward trend on the monthly. And that's important to keep in mind, because a pullback is just a pullback. It's just an opportunity for back end fill for the OTF. On the weekly, it looked like we were going to start to see a start of a downward trend, but they took it back. And now here we are. We have no slope. We're losing separation, and we're challenging the 20 SMA here at the 2712 and a quarter. So, and we have an MA cross here. So I'd be watching the 2709 area today, and then of course if we get below the 2700, that 9175 is the number that I'm watching, and I'll show you why when we get to the structure. Going to the daily, again, it looked like we were getting another continuation move up, but here we are breaking below the 9 right now. That's at the 1575, and the 20 is down here, that 91.75. Again, very, very important level for us to hold, and I'll show you when we get to the structure. Going to the 4 hour, you can see we've broken below the 9 and the 20. We're starting to get some slope and separation. We do have a technical gap here, so it wouldn't be unsurprising with the gap that we're going to get today to get a move back up into the 1820 area and test and close this technical gap to the upside first. And then just going to the 30-minute, you can see that the trend on the 30-minute has been strong, good slope, good separation, failure at the 9 on every retest, and here we are testing the 9 again from below. If we get above it, a move up into the test of the 20 is going to bring us up into the 1350 area. So let's look at what it looks like in structure. And again, I'm just going to give you a bit of narrative here. We had the long trend up into new all-time highs. These all-time highs are unequalized. What I mean by that is our June adjusted all-time high is actually 2883 and a quarter, and the 2880 and a quarter is the all-time high in the regular trading hours, the RTH. And this chart represents just the RTH, not the full session. Then we try to hold value in the 2800s. We gap down, make a run all the way down to a former microcomposite VPOC, dip down into the 2500s. They come up, take a trip through the value area, and we try to come up into the 2800s, and we fail there. Okay, and then we come back down, and then we've just been trading inside of this very large value area that runs from the 2720 area down to the 2590.75. Remember, our month low is 2591.50, and we rotate up into a breakout, and we look like we're breaking out. And then 2 times now we've failed at this 2741.75, this key line that's in the sand above. And now we've moved back, and we have balance that is centered right around this 2720 area, which is the longer time frame value area high. And now we're falling back inside of that, and we're coming down to our next key line in the sand, which is at the 2703.25. And if we don't bounce off of that, the move is likely to move down to this 91.75, and that's that key level I keep talking about. Just below that, at the 84.85 level, is the smaller time frame microcomposite, and its value area high. And the 2 time frames from the February 2nd and from the breakdown on the 22nd, our VPOC for these 2 sessions is down here in the 2668-69 area. So if we don't hold this 91 and we push through and we get into, below this key CLVN and the value area high, and move down into the 2669 is a probability we have to be looking for, and back into this area that centers around the 84.25 and the 2618, which is this undetermined fair value down here. A lot of HVNs, but no real prominent one on the composite. Keep an eye on that 03. We don't hold the 03 into the mid, the 0150, and I doubt that the 2700 will hold at that point in time, and we'll take a dip down into the 90s, with the first target being that naked VPOC at 90. Is it 96? 96.75, and we've got another naked close down here at the 96. So the inventory overnight is almost 100% net short in both time and value. We have double the average volume, so we have volume coming in on this move down, and we're seeing the delta just really get crushed. So you can see that we have OTF activity. If you look from where the European session opened, we had pretty much OTF activity, more than twice the average volume coming in. So the sellers on the OTF, the other time frame participants, were involved in this move down, and that makes me suspect that we could see some continuation lower. So let's talk about our levels. Our overnight low is down at the 0450. Our overnight high is up at the 27.25. Our daily ATR is running right now. It's, believe it or not, it finally got down below 30. Our 20-period full session average true range is running at 2860. That's on the 20 period. So based off of the overnight low, our daily upside ATR, let me just make sure I put this in, 2733. Okay, to the upside, and off of the overnight high of 27.25, our downside daily ATR is down here at 2698. So we made a big move overnight. Okay, almost the full session average true range right now, and we're going to be opening with a gap down. Now, if we open, I'd have to make the adjustment. If we open down here in the 08, 09 area, the half gap fill is going to be in around that 17, 18. So what are my main hypotheses? Well, with the OTF in the active in the overnight session, let me just bring this down here. So So I'm looking for an open auction out of range. I'm looking for a push up into this 13 and a quarter. Okay, 1350. This is another gap above us, and somewhere between here and the 1920 area, I'm looking for sellers to step in, rotate us down into the overnight low, push into the mid of the gap, okay, push down into the 96 to 91.75, and then I'm looking for buyers to step in here and rotate us and close us somewhere in around the overnight VPOC, which is here at the 2709 area. That is hypo 1. Hypo 2, as yesterday, we have three main hypotheses today because of the context. Hypo 2 is a gap and go day, failure to close the gap, failure to get above the 13.15 area. Okay, sellers step in, push us down into this 96 area, chop, and then fail and come down here with the main target being down here at the 26.87 and a quarter. That is the TPO from May the 9th at the TPO single. And then a push down into the 81.75 and then fail again and come down into testing the year open at 26.75 and a quarter, and a push down into this major balance area, the two microcomposite VPOCs in the 68 and the 69 area. That is hypo 2. Hypo 3 is an open auction out of range, a push down into the 96 to 91 area, find buyers, rotate us back up, okay, into the 1320 area, chop here, and then push up and close the gap and come up here and close somewhere in the 25 to 27 like we did yesterday on the way down. That is hypo 3. Hypo 4 is a rally day. The OTF step in down here in the 2700 area, between the 2700 and 26 area, and then we get a rally day back up into the lower distribution. Come up here, we left two singles from yesterday at the 28 and a quarter and 30.75, and then push up into the upper distribution and close somewhere up here in this 36, like nothing actually happened overnight or yesterday afternoon with this sell-off. So those are my four main hypotheses. There is a fifth hypothesis, because of the context like we had yesterday, and that is a balancing day waiting on the Fed minutes to come in, and basically we just chop between the 96 and the 13 area, and we just create a sideways day with a gap day down, but more of a doji and closing near the open. That is my alternative. Take a look at gold. As we've been talking about for a while, we are back down here in the major composite VPOC that goes all the way back to October 24th, 2008. So 10 years, the most traded price, and we're back trading in it. We were looking for a move yesterday up into the 1300 and fail, and then push through down into the 79. Didn't quite get to the 1300 in the overnight session. Now our high is at 98.40. We've come back down into the balance and pushing through to the other side, testing this value area. And you can see this is where the buyers have been stepping in, is down here in the 80s. And if we can't hold it this time, I'm looking for that move down into the next destination, which is down here in the 79, 78. And that's what I'm looking for today. Watch for any failure to get back above the 1290.80 for a push back down to test the 88, 87 area, and then failure into this 80 to 78 area. If we do get back above the 90, 80, look for the push up into the 94.30, and anything above that, I think we do get our move back up into the 1300. But I'm expecting this 1300 to fail on its first attempt, and that's why I'm waiting for a push up, because I want to sell between here and the 1304 for a move down into this 78, and that's a good, $25 to $30 move in gold, and I'm going to try to catch that ride if I can. That's going to complete our pre-market session. As always, trade well, trade safe, and we will catch you on the flip side.